Hello, viewers. Welcome to my channel, Sensor 360 Investor, where we use best practices from around the globe from the companies that we invest in and apply those to the investing process. Today, we're going to take a look at markets. So, um, just a reminder that investing is a complex affair, and here we try and use best practices to build a cohesive framework for used by retail investors to help them with their trading and investing. Okay, so in terms of the agenda, we're going to cover the S&P 500 as a proxy for the market. We'll also take a look at some treasuries, some sentiment readings, look at some earnings for the week, economic calendar, see what's coming that might be market moving events, and we'll finish up with one stock idea. Okay, just to go and quick disclaimer note, reminder that this is not providing financial advice. Please pause, read through the disclaimer, and then continue. Okay, welcome back. So without much further ado, let's begin the show. Here's the long-term view of the S&P 500. And so we come out of this long, and here's the COVID crash, we come out of this long uptrend. So we're still kind of locked into this downtrend overall. However, there's some green shoots here. So it looks like we had established initial support back here. This was back in the summer lows, but we met against this downtrending moving average up here. We found resistance, and then we came back and retested it back in October. And so since October, we've been kind of moving up slowly, and we have this downtrending average line just above us. It fell there once. It hasn't quite reached there so far, but it's just slightly shy of it. So if either one or two paths, we could either end up in, or maybe three paths, we could either end up in a channel, just that'll become short-term resistance, short-term support. We could just try and work off the this as digestion before we move it up, or if we can get muster enough thrust into the year end, which is usually a seasonal positive for the market, we could get above this resistance, but we'll need to see more volume coming in. Or probably the greater probable play is that we get turned away at this level, and then we come back and retest these lows. If those don't support hold, then we're into this zone, which we've been tracking for a while now to see if the market will indeed get into this zone, or even into this secondary zone down here. So that's the long-term view. In terms of let's take a zoom in terms of the on the dailies. So on the dailies, we can see the pattern a little bit more clearly. So here's the resistance, and this is the 200-day now. And so again, we just shy of the 200, came back in, tried to make another run at it. So notably, take a look at the volume. So the volume has significantly come off since we kind of crossed the 50-day mark here. So this whole move, and there's some gap ups here as well, this whole move has happened on extremely low volume. And I know we had the holiday weekend and a shortened trading day on Friday. Still, the price movement does not corroborate the volume doesn't corroborate the price moves. And it's notable that again we're sitting at kind of a resistance zone. So this week's action will give us a little bit more clarity as to whether we're going to come back in and retest one of these support zones, or we're actually going to make an attempt to get above this zone, and then we're looking to test the 43. So 4100 was an area that I shared before a couple of weeks ago as to that was the likely target that we were going to aim for initially. So we're still 4100 still remains the area to watch. And then on the zooming in again into the hour chart, we can see how on the hourly, it kind of, we formed this kind of double topish pattern right here for now, and we couldn't get above it last week or the last few days. So this obviously has to be taken out if we're going to move up, or we come back and test. This will be the 200-hour period, which is back down at close to 3850 to 3900, and 4100 was our initial target that we were seeing. Can we get to that level? So we're kind of in this zone. And then if we look at the weekly or the daily price action, but look back over the week, 1 week review, and which is the last 5 days, and you can see the last 5 days clearly holiday, short-term weekend, not much volume happening, but price is either trading very tight in all these doji patterns, or it was trading wider bars than the volumes kind of give away. So this whole move here is a little bit iffy, and then even this move here, we had a couple of good trading days here, but for the most part, the volume picture has been coming in, and so this move from the this kind of lows here up is happening on questionable volume for the most part, and we have resistance sitting above there. So in terms of notable selling, so over the last 25 days now, we've got 4 days of notable selling, 0 in the last 5, and then accumulation type of days. The past 25 days, we just have 1 now, and 0 in the last 5 days. And then overall, over the last 25 days, there have been 6 up days on heavier volume and 4 days down days on heavier volume. So definitely the picture shifted from 3-4 weeks ago. Looks a lot better than it has been, but we are now getting into a testing zone on the markets. Okay, so on to treasuries. In the terms of the 10-year, we can see how the 10-year kind of moved. It's been pulling back in. It's likely to hit support. So as it comes in, we've seen the market move up. So these two are moving almost lockstep in opposite directions. The 20-year, I had pointed out about 3, 4, 5 weeks ago about possible capitulation selling in the 20-year. It did kind of hit that marker support zone. It's been moving up now, but there's resistance in this area here, 105 zone. So we'll see if this can get to that level, close to it, and then we'll see what it does, whether it's a come back and retest, or it's going to muster some momentum above it. I also added for this week, I did the 2-year, because the 2-year is kind of important treasury, and we can see really the trend in the 2-year remains up, solidly up. And so this one, a lot of people watch the 2-year for a number of different reasons. So back to the 10-year treasury, 3.69, the S&P trading 12 months about 4.78 earnings yield. So again, just kind of indicating a slight the oversold on the S&P, or undervalued. And then if we look at relative charts, so we can see how I pointed out that divergence as the yields were moving up. S&P stopped making new lows, and that marked a point of divergence here. And since then, we have moved up quite a bit in the S&P, and the rates of yields have continued to come down, although they're now headed toward a support area. So we'll see if around 3.5 or it starts to get some support and then starts to move back up. If it does start to move back up, wouldn't be surprised to see the S&P start to come back in again. Okay, so if we look at the put call ratio, this is a contrary sentiment indicator. So we've, we saw a peak here, which was a good trading setup, and now we've come back all the way in. So it's like at the opposite end of the at the opposite end of the spectrum. So this could mean that we may see a pullback in the S&P as well. So just a couple, an additional point to consider. And then let's take the fear index itself, the VIX, and we can see the VIX has come back into the 20 zone. Actually, touched below 20. Looks actually just around the 20s last week. This is a weekly chart. So the VIX is, and I've mentioned this before, the VIX has really never gone to the fear levels, which is up here. And so the chances are, as it pulls back into close to 20 or maybe sub 20s, then wouldn't be surprised if it starts to move back up as we hit resistance zones in the market and the market pulls back. So this will again corroborate the movements in the S&P. Another sentiment indicator view from the AAII readership, and we can see that we've moved off of kind of this is a contrary indicator when it was down here, greed, and now we're kind of a little slightly more neutral, but still headed towards the kind of the greed. So when this was down here in the green, in the green zone, then it was indicating that might be some profit taking might happen. And then if we look over here, it was very bearish early on September. The bullish has picked up a tad, not really notable. Still, the bullish sentiment is still largely dominating, and neutral is quite a ways below the high. Historical averages, so here neutral is pretty close to its historical average. The bullishness is well below, whereas the bearishness is well above. So, still some concern overall. In terms of earnings watch, there's a couple of stocks that I thought might be of interest into it. So most of you who do your own taxes using TurboTax will be using this product. So they're expected to come in at 117, which just indicates a beat. And then Dollar General expected to come in at 255 on earnings, and they're also expected to be there's not a lot of earnings stuff going on in terms of the economic calendar, and at some point I'll go into these a little bit more in separate videos. But for this week, there's notable events coming in this and all of these in their own right can be market moving news. So definitely got the ISM manufacturing, the Fed meeting itself, factory orders is always watched for the health of the economy, and obviously the job numbers in terms of the unemployment comes out Friday. So we could have a little volatility in the markets based on just the economic reports coming out. And then one stock for the week to finish up. Actually, for this week, there was a number of potential stocks. So I picked one that wasn't in the oil energy sector. Most of the stocks in the so the lists are being dominated by oil and energy and or gas and exploration, all that stuff. So this is a stock that's in the medical side, McKesson. Some of you may be familiar with this. It's got a pretty reasonable, strong uptrend. It's had a couple of pull-ins, and it's pulled in a couple of weeks ago. Now it's starting to move back off that. So you may want to take a look at McKesson. And on the right-hand side, what I've done is I'm going to just have this running little table of 4 to 5 stocks. They'll just roll off. And then so November 12th, I pointed out Raymond James, financial, and I'll just track these for 4 weeks and then see what the percentage move was. This is not indicative of any trading system or whatever, but it's just to see the ones that were called out in terms of one stock, how they performed over the next 4 weeks. I didn't send out a report last week, but at the sensor meeting on Sunday night, I'd picked out FANG as one to watch. So we'll use FANG as the proxy for no report last week, and then we have McKesson from this week. So next week, RJF will be on the list for 4 weeks, and I can populate this, and then it'll show for 1 week, and then it'll drop off as we move this, rotate through this list. So that's the idea for this week. Okay, so that wraps up in terms of the futures for tomorrow. What they're looking like is right now they're negative, following a positive week last week. There's some news from Asia, which is having some bearish sentiment on the markets. If you haven't already done so, please subscribe. Thanks in advance for doing that. If you like this video, please click the thumbs up, share with your family and friends. Always helps. And if you up to it, leave a comment and share your ideas on where you think this market is currently and where it may be headed. Thanks for listening. Thanks for watching. I will see you on the next video. And goodbye.